we get a read on this crazy emotional market? For ages, we've been stuck in a house of pain, terrified of rampant inflation that could cause the Federal Reserve to throw us into a recession, to say nothing of the war in Ukraine, COVID lockdowns in China. This has been a miserable year for stocks, and we're still got lots of very legitimate concerns about the direction of the broader economy. But a little over 3 weeks ago, this market seemed to find a floor, and many of the things we've been afraid of have started moving in the opposite direction. Commodity prices, right? They've collapsed from their highs, suggesting that we made more progress on the inflation front than many people seem to want to believe. Bond yields have also come down substantially. No one wants to believe that at all, but it's true. It's a sign that the Fed might not have to raise interest rates as rapidly as we were expecting. Happened again today. China's starting to go back to normal, even if that process is a lot less linear than we prefer. One step forward, half step back. Let me put it to you this way. Not that long ago, this market was trading as though a recession was inevitable. Although we bounced a little from these levels, I think the averages still reflect a pretty hard landing and much softer earnings than expected. The doom and gloom remain pervasive. Wall Street's totally shell-shocked from the last 7 months of being torn to pieces. Yet, from a fundamental perspective, we're still in much better shape than we were a month or two ago, except for the companies that are really hurt by the strong dollar. So how do we reconcile these two competing visions of the stock market? Tonight, we're going off the charts with the help of our friend Larry Williams, the legendary technician and market historian who's been in the game since I was a zit-faced, Clearasil-starved teenager. Larry's written more than a dozen books. He's created a host of his own proprietary indicators, all of which you can find on his website, ireallytrade.com, and that are used by everybody on TV constantly. He's got an incredible track record, especially when it comes to calling bottoms at moments where everybody else has given up. Remember in April 2020 when everyone was terrified that COVID would destroy the economy and we might be headed for a second Great Depression? Williams said, bye. He said business would start rebounding within weeks and the market would bounce with it, and that was one of the greatest calls ever. Right now, Larry, despite all the gloom around him, really likes what he sees. Specifically, he's watching the behavior of different types of market participants, and the behavior looks bullish. Every week, the Commodity Futures Trading Commission releases data on the net holdings of 3 different types of investors. They divide them into the public, large traders, and fund managers, and finally commercial hedgers, meaning the companies that are actually involved in a given industry, meaning buying the futures because it's part of their business model. Okay? When it comes to these 3 groups, Williams has told us that he thinks the latter group, commercial hedgers, tend to have the best understanding of the particular sector because they're the only ones involved who are doing more than just gambling. That doesn't mean that commercial hedgers are always right, but they've got an edge that the public lacks, whether they're talking professional money managers or regular people. Now, when it comes to the stock futures, commercial hedgers are mainly banks, mutual funds, and even governments that may be in the process of buying or selling stocks. Williams has done extensive research here, and when these guys get very bullish in their positioning, even though the charts may look bad, it's often a great buying opportunity. Thanks to the CFTC's weekly Commitments of Traders report, or COT report, we know what each of these 3 groups is doing. Especially in important bottoms, Williams points out that the commercial hedgers tend to be bullish, while the large speculators like money managers and, of course, the public tend to be bearish. So now here we go. I want you to take a look. This is pretty amazing stuff. At the weekly chart of the Dow Jones Industrial Average Futures from late 2009 through 2014. That red line at the bottom shows the net position of commercial hedgers, the ones that Larry says are smarter than the other guys. As you can see, near important bottoms, they typically step up their buying. Step up, step up, step up, step up. If you move forward and look at the period from 2015 through mid-2019, exact same story. When the going gets tough, the commercial hedgers go long. Step up, step up, step up, step up, step up. Finally, watching the Dow futures from mid-2018 through today. So now we're talking current day. The pattern continues. More importantly, it happened again over the last few months. The commercial hedgers have gotten increasingly bullish as sentiment's gotten more negative. According to Williams, this is an incredibly encouraging sign. Look at this. Here's the decline, okay, that we're also crazed about, right? Look at this. Look at that. Come on, look at how right they've been. They're right over and over and over again. Just as important, you notice the commercial hedgers and money managers, the large speculators, have been going in the opposite direction of late. While the former get more bullish, the latter have gotten more bearish, shorting the futures aggressively. That matters because historically, when the commercials and the hedge funds are going in opposite directions, you're much better off betting with Yes, the commercials. Take a look at the weekly action in the Dow futures from 2014 through 2016. The red line on the bottom shows the net position of commercial hedgers, while the blue line shows large speculators. All right? Look at this. We had a double bottom in 2015-16, which many people were really, I think, just on the fence about or betting against. And look at each lows. The commercials were going increasingly long, while the large speculators, blue, were giving up, going increasingly short. It's happening again. How about more recently from late? This is this now we're looking at from late 2019. This is through actual 19, current right now. Buying, selling, shorting. Actually, these are shorting. Look, in the spring of 2020, when COVID first hit and the market collapsed, it was the commercial hedgers who bought aggressively right after the bottom, while the large speculators got more bearish. More importantly, when you check out the recent positioning, the commercials just keep upping their net long position, while the large speculators get more and more bearish. So this is that current day. This is a zoom in, bullish, bullish, bearish, bearish. Believe me, I can understand why the large speculators have totally given up on the stock market. It's absolutely infuriating. But Larry's right. Markets bottom when the hedge funds throw in the towel and the public throws in the towel. And based on the history, he suspects that's exactly what's happening now. In fact, when you look at all the data from late 2012 to today, he points out that commercial hedgers are now buying stocks at some of the highest levels ever seen. Meanwhile, the large speculators and the public are more bearish than any time that he can call. These large speculators right here, I can't believe how could they be all right? These are the people we hear from all the day, by the way. That's who you're listening to. That's who you're listening to. Who's right? If history is any guide, and I think it's the best one we have, then Williams says this kind of pattern is very bullish for stock prices. The last time we spoke to him about the broader average in late May, he predicted that after some choppy trading, the market would have a strong rally through late August. Right now, what he's seeing in the futures confirms this thesis. He likes what he sees. All week he was telling me, this is it, Jim. I like it. This is exactly what you expect to see when the bottom's put in and stocks are ready to rebound. Here's the bottom line. Despite what you heard all day on TV, right now, commercial hedgers have gone very bullish, while the hedge fund complex and also the individuals have gotten very bearish. And the charts, as interpreted by Larry Williams, suggest that you want to bet with the reds, not with the blues. As he sees it, you don't have to be smart to know the future. You just have to know what the smart money's doing. I wouldn't go that far myself, but given Larry's incredible track record, this is, believe it or not, in a tough, tough day, super encouraging. Stephen in Rhode Island. Stephen.
Hey now, Jimmy Joe.
Yo.
Thanks for taking my call, Jim.
You betcha.
I'm calling you about Constellation Brands. Personally, I'm very bullish on the stock, and I love the company. Despite posting pretty solid earnings and guidance, the stock fell almost 4.5% on the release date. I'd love to hear your opinion. What will drive the company's growth for the remainder of the year, and does the Canopy deal worry you at all?
Okay, so here's the deal. That actually, the stock exceeded where it was after the big decline when it reported and then gave back that. It's flat with where it was when the company reported. That's very, very positive. The Sands deal gives an opportunity to be able for a company to be able to buy back more stock without enriching the Sands position itself. And also, by the way, they were paying the Sands a lot of money. And yes, an acquirer can come in much more easily. Constellation's great. Go against Sam. We've been getting Sam the whole time, Boston Beer, and in favor of Constellation, which for people who don't know it is Modelo, Corona, and Pacifico. Commercial hedgers have turned very bullish here. That's red. These are the people you should bet with, okay? The blues say they're wrong. Red says they're right. So it's going to go like that. Red has been right. Blue has been wrong. That's what you need to know about this chart. Much more Mad Money ahead, including my exclusive with Mizo Robotics. How is this private player crafting the future of tech-filled restaurants? I'm talking to the CEO. And after terminating his deal to buy Twitter, what obstacles could Elon Musk have in front of him? I think I got some insight others don't. And all your calls, rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.